Wei Li, thank you so much for joining us here at FundForum International. What are managers saying to you at the moment about how they're feeling about the market and where we're at in the cycle?
Some of them are feeling nervous, and there's a lot of prudence in investor perception of what's going on right now. And the reason behind the prudence is concerns around trade war, what's happening between US and China, how they're going to evolve it and resolve it, and also concern around growth slowdown. In our view, growth is slowing down but still growing, and we're not looking at a recession around the corner, which is why we're still quite pro-risk, thinking that there is more to go in this cycle.
And sometimes this point in the cycle is quite an opportunity too.
That is true, precisely right. We have done studies looking at historical risk asset returns, and what is really interesting to note is that at this late stage in the cycle, risk assets actually return higher than their average return throughout the cycle, which means that even though it feels a bit scary, it pays to stay invested in markets.
So be brave, but be careful maybe.
Be brave, be careful, and be selective in terms of how you put your risk budget to work. So instead of putting, it doesn't matter where you stay invested in, and previously the quantitative easing tide is lifting all boats. Right now, it's not so clear how the additional central bank support is going to support different parts of the market. So one has to be a bit more selective in terms of where they invest.
Now, one area that was talked about on your panel is emerging markets. It's an area you know quite a lot about. What would you say about that as an opportunity at the moment?
We like emerging market at this point, especially given the dovish pivot from central banks. There is dollar weakening, and there is emerging markets supportive. And beyond the tactical turn in markets, we also see emerging market as a structural opportunity as well, given attractive valuation, given China coming of age, getting increasingly adopted by international investors, and also more broadly emerging markets. We talk about US economy being in late cycle, emerging markets are in mid cycle. Some of them just came out of recession. There's a lot longer for emerging market economies to grow and go in this cycle than their developed market counterparts. So definitely good to have that in your portfolio.
Now, another area I wanted to talk to you about, because it's an area of your expertise, is ETFs. It's had its own summit here at FundForum. What would you say about them? They've seen enormous growth.
ETFs have seen enormous growth. The runway for ETFs growth is still very, very long, and I'm going to give you two statistics to illustrate that. The penetration rate for equity ETFs versus the underlying stock market is 4%, which means that the asset under management of ETF is only 4% of the underlying stock market. An equivalent number for fixed income is less than 1%. So people talk about ETF and how much it has grown. It came off a very low base, and with greater adoption of index products in international and also in investors' portfolios set to grow, we see ETFs benefiting from that, and also regulatory tailwind as well. Given the still low penetration rate, it can grow a lot more.
What would you like to see investors doing in terms of both the short-term approach but long-term? Can you see any really interesting trends or areas that you think they should be tapping into a bit more at the moment?
I think in terms of the usage of ETF, what have been thought of previously is that maybe it's more tactical in how investors use in their portfolio allocation. But what we're increasingly starting to see is also buy and hold of ETFs in the core part of the portfolio. People don't trade a lot in and out. It's just a very cost-efficient way to asset allocate for the long term. So this is what we expect to see. That's one trend. The second trend is the adoption of fixed income ETFs in bond portfolio managers' portfolios. It's somewhat counterintuitive because ETF trade like a stock, but then it represents a portfolio of bonds. So it takes a bit of education for the adoption to pick up, but we see great progress there. And the last point I would make, which is also kind of like in between ETF and also markets, is the how ETF act as a great access instrument for China assets to be adopted by international investors. So China is just opening up. It's coming of age. It has the second biggest economy in the world, second biggest equity market in the world, second biggest bond market in the world, and foreign ownership of Chinese assets is only 2%.
And demographically, a hugely growing middle class too in Asia,
exactly.
Across Asia.
So for investors sitting here in Europe, sitting here looking at China, a very cost-efficient way to access a foreign and somewhat exotic market, ETF can act as that access vehicle.
Wei Li, great to talk to you. Thank you so much
Thanks
for sharing your
having me.
insights with us.